Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And Bitcoin, guys, is still operating within this tiny little wedge here. In fact, I'm going to jump in here to the 4-hour chart a little bit closer so you guys can see a little bit better what I'm referring to. We are still operating within this small little wedge. Obviously, price had this massive breakdown here, finding some support right around 3,700 with, if we look at this ascending support line here, guys, found support right at that ascending support line, lining up nicely. That support seems to be holding as of yet. If that does break down, I do think there's a good chance we'll see a quick drop down to at least 3,600, possibly wicking below that here, as is evident by this long consolidation period we had between February the 8th and February the 17th. So we may see a wick right below 3,600 briefly, and then a nice little spike right back up. Excuse me. In fact, if price does end up breaking down, I will probably enter a quick scalp trade here between 3,600 or laddering buys between 3,600 and 3,550 with a very tight stop sitting at 3,500, knowing that if that 3,500 breaks down, it'll be very likely a very quick drop down to 3,400. Very quick drop down to 3,400, and at that point people are likely panic, and we could even drop right below that. We'll have to wait and see how it works out. But yeah, that next major support I'd be looking at is 3,400. Next major support, the support I'm currently looking at is 3,600, 36 to 3,550, with a a nice wick below that 3,600. But we are getting consolidation, a series of lower highs, higher lows within a very small wedge. What I'm not liking about this, guys, is that typically when you see a wedge like this, especially on a smaller time frame, you don't see it go all the way to completion here, and we are kind of seeing that. Unfortunately, we're seeing it draw it all the way to the apex. Typically, you'll see a wedge break out just prior to the apex, and in this case, we're getting right up to the apex, which tells me that there's a good chance this will be disregarded, and price could just kind of meander here and just move sideways, or what often happens, especially in a situation like this, it'll move sideways here briefly, a very small breakup, and then it'll just crash right back down. So as I kind of pointed out yesterday, guys, I wouldn't be surprised. I wouldn't be surprised to see if price does, and actually I would be surprised if price breaks up and then breaks back down at this point, because we are so close to the apex. But what I wouldn't be surprised now is to see something like this, a small breakup, and then just a crash right back down to that 3,600. That would not surprise me in the least, just based on how close it is coming to the apex. And if we look back here at prior wedges, guys, again, there are some differences in what we're seeing here. Obviously, it's a much smaller time frame, but we just look at some wedges prior here, guys. We can see obviously not coming to the apex here. In fact, if I draw out a wedge to its natural completion from what it was here, we can see it broke out prior to the apex here, prior to the apex here, going all the way back well prior to the apex here. Even on this one, guys, we got very close, but you can see nowhere near where it is now, as close to the apex as it is now. But one scenario where it was very close to the apex was right here, guys. And typically, as I said, when a wedge gets this close to the apex, it very often ends up breaking down, and that's kind of what we saw there. So I would not be surprised, guys, to see this breakdown. Now, again, it is very on a very small time frame. It's only on the 4-hour. It's a very small wedge here, so that will certainly play into how far this thing does end up breaking, at least initially, in my opinion. But there's no question, guys. It looks like the wedge, as far as a possible breakup, could get invalidated. We could just see more sideways movement, possibly a quick juke up, and then price just breaking down. So I would definitely see. I would definitely say probability favors price breaking down at this point in time, at least to that 3,600 zone. Coming over here and looking at volume, guys, and let me refresh this so we have the most current volume. Volume of about 7.5 billion on the day. That's relatively speaking. By relative, I mean looking at the last 2 to 3 weeks even. That is relatively high. Remember, just 2 to 3 weeks ago, we were sitting at about 5 billion on average for the day. So it is still a nice uptick from where we were 2 weeks ago, but it is a slow decline from where we were. And so again, guys, this is telling me that we may again see price coming back down, testing that 3,600, possibly even lower than that. We'll have to wait and see. But what is definitely true is, especially looking at the larger time frames, guys, we definitely have not broken we have not created a new high. Remember, this prior high from our prior low here back on December the 14th, our prior low on Coinbase was about 31.30. Since that low was in, the high created after that was about 32.40. Again, on Coinbase is what I'm looking at. We did not quite get up there on this last spike, but there's no question that this zone between, as I said, 4120 and 4000 continues to act as a very, very strong resistance. And until that is broken, guys, we are not in a overall uptrend. We are still in a bear market overall, even though things are starting to kind of move sideways over the last 2 months. We've been basically moving sideways for the most part, big picture wise. But still, guys, the bears are still the probability still favors the bears until price does break above and create that new high, at least up above 32.40, or even if we can get a decisive break above 41.20. Again, by decisive I mean a daily candle opening and closing above that 41.20. Until that does happen, guys, this is still, in my opinion, still a bear market, and probability still does favor price coming back down and at least retesting some of these prior lows here, if not the prior low of that 31.30. All right, let's zoom out on the weekly chart so we can get some perspective, guys. In this weekly chart, I mean, tell me if that does not give you some perspective. I've told you before, guys, if you do have FOMO, this should cure that very, very quickly. This overall weekly chart tells you that we are obviously still in a very bearish market. This latest move, even from this little move back in December, all the way looking at this current move now, I mean, this move just looks almost like nothing. In fact, if we zoom all the way in here and kind of really analyze this latest move, it was bullish that we were able to get back up above 3,600. That was key. And then 3,600 started acting as support. And again, that is key. And if 3,600 can hold, I do think that's going to be a rather bullish sign. At that point, we will, creating a series of higher lows. We'll have to wait and see if it can. If 3,600 decisively breaks down, but again, when I say 3,600 does hold, that doesn't mean that price can't penetrate 3,600 briefly, but only by a wick. I don't want to see, especially I don't want to see a weekly candle closing below, or even a daily candle closing below there, but certainly not a weekly. But if that can hold, then that'd be a very, very bullish sign. But for now, guys, we can see, zooming in here, that this candle here, last week's candle, we tried to break above, and we had a very, very strong rejection here. This candle here is a very, very bearish looking candle. Even though it is green, it's a very bearish looking candle. Now, the follow-up candle for this week, guys, we're in day 3 on this week's candle. The follow-up candle here is looking a little more bullish. In fact, we are up above the prior close of last week's candle, so that's a bullish sign. We didn't get that follow through. In other words, typically when you'd see this as an analyst, you'd expect a nice reversal and then price to continue back down. As of yet, we have not seen that. Doesn't mean we won't, but as of right now, we have not seen that. But we are getting that trickling off in volume. It does look to me like probability is again favoring at least testing 3,600. We'll have to wait and see kind of how that plays out. All right, zooming all the way out again on the weekly chart, guys, as I've shown you guys before many times, we can see that there is just not a lot of support below that 3,600 until we get down to that $3,000 range. I've covered this before for those of you that have missed it. I just want you guys to be aware, if 3,600 does break down, we could very quickly find ourselves at least retesting this prior low here of 31.30 on Coinbase. Again, it'll vary depending on your exchange, but wherever this order structure here on your exchange, we could see it coming down, testing these prior lows, possibly creating a double bottom, coming right back up. But if that bottom does break down, guys, I think we'll quickly find ourselves at least at 3,000, possibly coming back down to that 3,500, and coming back here and looking at prior order structure. This goes all the way back to the mid 2017. We can see that there should be a lot of support between 3,000 and 2,500. There should be a whole lot of support between 3,000 and 2,500. We can also see, if we come over here and we look at this prior order structure here, and we extend the line all the way out, we can see that this is following in a nice ascending support line here, guys. So we'll see if that does end up maintaining itself. Now, we're looking at this now, we can see that would coincide with about 3,600 here in about another month or two. So that does allow for a wick right below 3,600, possibly bouncing off that and hitting right back up. If we do break below this ascending support line here, though, guys, by more than a wick. Now, again, I can see us coming down, wicking down, testing the prior low, and then having a nice double bottom right back up. But if we break down by more than a wick, again, guys, we'll very likely find ourselves between 3,000 and 2,500. And I told you guys in the past, this is a very strong buy zone for me. Laddering buys between 3,000 and 2,500 would be a very, very strong buy zone. That being said, guys, there are still some analysts that are calling for even prices coming down lower than that, and I can see where they're coming from. I'm not saying this is a probability, but if we zoom all the way out here on the monthly chart, and then we zoom out, and then we bring up log scale, you can kind of see what they're looking at. And there's no question, guys, and I have it drawn down here between about 1,100 and 1,200. That is a very hard support in my opinion. And we can see that if 3,600, zooming out of the monthly, that $3,000 to $2,500 range, even though it looked like a very strong support on the weekly chart, and certainly there's a decent demand zone there. We can see even on the monthly, this is not nearly as strong of a support as the weekly chart would suggest when looking at the monthly. That's a very strong support, but it's still we can certainly see a scenario where this does end up breaking down, and we get some real fear and panic in the market, and we can see price very quickly. If that 2,500 does break down, guys, you can see a scenario where price very quickly would fall. There's just no support in this area right here, almost at all. There's just no support right there between that 2,500 and that $1,200 to $1,100 range. That being said, that $1,200 to $1,100 range would provide, in my opinion, a ton of support. This would be a hard support. This is where I would go in very, very heavy if we ever saw it. And I don't think this is a probability. Please don't misunderstand me. I'm not telling you that Bitcoin is going down to 1,100. I'm telling you there's a scenario where that does happen. And even though I think it's improbable, it is possible. And if this does happen, everyone's going to be panicking. There'll be blood in the streets, and you should be buying. This is when you should be getting greedy if Bitcoin ever does come back down to this level. You can see price came back up at the end of 2013. This is on the monthly chart, remember, created a very, very hard resistance back at the end of November of 2013. Price came back down. We had this bear market for a while. Finally, we bottomed out here at the end June of 2015. Price came up, found a very, again, hard resistance right there between 11 and 1,200. Created that hard resistance for 1, 2, 3, 4, 5 months before price just exploded. So what was resistance should act as what was a very hard resistance should act as a very hard support. So if price does end up breaking down, I will deploy a ton of fiat between 33,000 and 2,500 with a very tight stop loss sitting at about 2,400, somewhere thereabouts. If that does break down, guys, this is where I'm going to be deploying most of my fiat, and by most I mean about 95% of the money that I have available to buy Bitcoin will go in between 11 and 1,200 if we ever see that. And again, I'm not saying we will, but it is a possibility, and it's something that you guys should be mentally prepared for if it does happen. If it does, and you're mentally prepared for it while everyone else is panicking, you're going to be like Warren Buffett, and you're going to be prospering. All right, zooming all the way back into the 4-hour chart, guys, looking at some of our indicators, we can see, looking at our MACD, we can see that the MACD is basically just flatlining here, guys. Again, we're looking at the 4-hour. We can see the histogram has been unable to break into bullish territory. We can see that the RSI 4-hour is just basically also flatlining, sitting somewhere around 44, 45. So again, not bullish at all. We can see that the MACD line's been unable to cross up above the signal line there. Again, a rather bearish sign overall. Or at least a sign that price is about to move. Anytime you see a flat line like this, especially for any extended period of time, which I'm not necessarily saying this is an extended period of time, it isn't, but the fact that we are getting very close to that, right at the apex of that wedge, typically, again, as anytime you see it getting that close to the apex without a move, it'll move sideways just past that area for, maybe 8 to 24 hours, and then usually it'll end up, oftentimes I should say, it'll end up breaking down. Not saying that's going to happen here. We could still get that breakout. We haven't penetrated the wedge yet, but I'm just saying, in this case, guys, as close as it is to the apex, that's just unusual. Unusual to see, especially if price is going to end up breaking up. We'll have to wait and see kind of how that ends up playing out. Excuse me. Looking at the daily chart, guys, we can see the RSI is sitting at about 53, somewhere thereabouts. We can see the daily MACD. Looks like it's about to cross into bearish territory. The MACD line is about to cross over the signal line. Again, also suggesting price may end up breaking down. Well, again, we'll have to kind of wait and see how that ends up playing out. I'm not seeing a real trade setup at this point, guys. Again, my money is sitting down here at 3,600, between 3,600 and 3,550, for looking for a very quick scalp. Also knowing that could end up breaking down. One of the things that I find very interesting, this is on the 4-hour, looking at our moving averages, exponential moving averages, as well as our Bollinger Bands. Let me get rid of that where it says daily chart so I don't confuse you guys. All right, this is on the 4-hour again. Very rarely do you ever see Bollinger Bands basically on a collision course with each other, and that's what we're seeing here, guys. We're seeing the Bollinger Bands went from this very, very wide, broad range all the way to just literally playing chicken with each other, almost just converging right on top of each other. This also suggests we may get a larger movement in price here very, very soon. And anytime you see the Bollinger Bands bottleneck like this, it's often a sign that price is getting ready to move. We're not seeing it on the daily chart. If we zoom out here to the daily, we can see that we're not getting nearly that kind of at all, that kind of bottlenecking. We're seeing the one bullish sign is we're seeing that we have been able to maintain price above the daily 21-day EMA on the daily chart, guys. I wouldn't be surprised to at least come down and retest that. That would currently put it at about 37.40, somewhere thereabouts. We could see a fake out price coming down, hit that 37.40, ended up taking right back off. We'll have to wait and see. But if price does break below decisively that 21-day EMA, by decisively I mean a daily candle, both opening and closing below that 21-day EMA, guys, that's going to be a very, very bearish sign. If we do break below that 21-day EMA, it should be a very quick drop below, nice long wick, and then a push right back up if there's a lot of buy orders sitting down here. I'm not saying that's going to happen, guys. I'm saying that if this bull market is to continue, that's what I would expect to see. If we see a breakdown and price just meanders down there and just slowly starts to fall, that's going to be a rather bearish sign, especially if that's coupled with a continuation of a drop or continuing drop off in volume. Now, I know some of you have been asking me if, with this reemergence in some volume in the market, am I going to start looking at Elliott counts? This while we have seen an uptick in volume, guys, this is still relatively very, very low volume, and I'm just not a fan of Elliott wave and low volume markets at all. That being said, I mean, if we look at this as this being a possible bottom, so this being a 1, looking at the 2, this coming up to be the 3, obviously 4 and 5 up there. So this being a nice 1, 2, this would be the start of a 3. Within that 3, guys, what we'd be looking at is let me just zoom in here, guys, so you can just see a little bit better. I'm going to pull into the 4-hour so you can see what I'm kind of looking at here. Within that third larger wave, we obviously have a lot of subwaves. And there's a few ways that you could count this. I'm looking at this as a possible 1, 2, and all of this as a 3, this being a possible 4, and I don't think that 4 would be done yet, and then we would be coming out for the 5. In other words, I can see a 4 possibly coming back down, double bottoming here, and then taking off again. If this is going to be a valid count, though, guys, that's a big if. This could all be a 1, 2, 3, 4, and that would all be a primary wave 1. But we'll have to kind of wait and see kind of how this ends up playing out, guys. But if this is a valid count, one of the reasons I'm pushing for this is, again, if I'm forced to look at this from an Elliott perspective, which I don't like to do, but if I am, obviously wave 4 cannot overlap wave 1. The top of wave 1. As of now, we're sitting, wave 4 would come back. If this was in fact the bottom of wave 4, we can see that it's barely hitting the top of wave 1, right on top of, so not overlapping yet, and you can even accept an overlap by a wick. You just can't have the body of the candle overlapping, and as of right now, it's not doing that. So that would still put me into a possible, or that would still suggest, in my opinion, this would be a 1, 2 coming down for the 4, back up for the 5. But one of the reasons that I'm looking at this as a 3 rather than this being a 1, 2, 3, 4, and this being all the way up for a 5 to complete this, one of the reasons is if I look at this and I pull my fib extension out, we can see that the 3 landed right on top of that, just slightly above that 1618 fib level. And we know that the majority of wave 3s, the majority of third waves, end somewhere between the 1618 and just above the 1618, which I'm blanking on right now. I think I'd have to look that up actually, but it's typically just above, about 5-10% above the 1618. Between the 1618 and about 5-10% above the 1618, that's typically where the majority of wave 3's probability favors wave 3's entering, and it hit that almost perfectly. So that makes me think this could be a wave 3. That and the fact that if I do count this as a possible, if I look at this as a 1, 2, 3, this would be the 4 here, and then this would be the 5. If I look at it this way, that 3 and that 4 just does not look, that's stretching it. Actually, it would be like that. That's stretching, in my opinion. That's just too shallow of a retrace for wave 4. Not impossible, but I think the more likely scenario, at least as of now, would be for this this sequence of waves not yet to be completed. This counted as the 3. The wave 4, possibly we're still coming back down to complete wave 4. Wave 4 possibly is in. We'll have to wait and see how this ends up playing out, and then back up for the completion of our 5th wave. Now, if this does drop down below the start of wave 1 here, which would be right around 3,700, if that does happen, that will invalidate that, and at that point we'll know that in fact this was a 1, 2, 3, 4, and 5. And we'd be looking at a something like an A, B, and possible C wave, something along those. Let me get rid of that so you can see those. Something along these lines here, and that C wave could come in even deeper. And again, I don't even like Elliott wave count at all, guys. I don't like it in low volume markets. So this whole thing could be invalidated. But again, for those of you that have been asking me about it, yes, I am monitoring it. I kind of do it. I play around with it when I'm doing my own trading, especially on very small time frames. I find it works out better for day trading. But for overall, for the purposes of these videos, guys, I'm really not seeing the value in it until we get a lot more volume coming in. Once that volume does come in, I'm going to start posting a lot more Elliott wave. But until that happens, guys, I'm just not seeing the value in it as of yet. It's just been invalidated way too many times in the past. I know a lot of analysts try to force it, and they're constantly invalidating their accounts because this just isn't working out the way they would expect. But personally, Elliott wave just does not work out very well in low volume markets. Just my opinion. All right, guys, this has gone longer than I expected, so I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, we would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.